All right, we are going live here. Let's see if we can find it. Okay, welcome back, everyone. Welcome back to the channel. And today we are going to talk about how to grow small accounts effectively along with the crypto updates. Let's wait for a few minutes. All right. So we were going to, yeah, we were going to talk about crypto markets as it is our routine. So we have been trading here from past 3 days on the live. Now today is the fourth day and BTC have just crossed this resistance. Now it have done this before, as we can see here. It have done this thing where it showed us that it have broken out of this resistance, but then it went back. It did this in today's morning, and it did this 3 days back. So what we really need is for BTC to close above this level of 91,580, and if we get a daily close above this level, then I'm very much sure that this time BTC is going to cross this level, or at least it will reach this white line which is at $94,000. So this is the update for BTC. And today currently BTC is looking very good here. As you can see, it have retested this trend line, stayed here for the weekend. There was no volume at all, and then today started, then dumped, and then again starting to pump. So this is what BTC chart looks like, and this is how Ethereum chart looks like. Here for Ethereum, it is again, if I make a trend line here, then Ethereum break out of this trend line from this downfall, then it started above, and Ethereum is looking more good than BTC here, because in BTC it is just near the resistance, and it is still have to means it still have to close first 4 hour candle above this trend, this resistance of 91,500. But for Ethereum, for whole day Ethereum has closed every single candle above this support or resistance, which is at $3,100. So for Ethereum, I am pretty much, kind of say lenient towards Ethereum. So if Ethereum is going to grow this time, I think altcoins are also going to grow with Ethereum, but that everything again depends on BTC's this close above 91,500. So now the third coin which we were targeting from last 3 4 days, which is virtuals, it is still in this range. All right, and as I've said this in yesterday's live, that virtual ecosystem is heating up. The coins on virtual ecosystem means AI agents of virtuals are going up. What else? Okay. Okay. So virtual ecosystem is heating up. So if any one of you knows how to trade them on DEX, you can go there, because if virtual system is hitting up, then that means virtual is again going to pump. But how many days it will spend in this range, we don't know. So it is better if you can trade the coins on virtual ecosystem. and do the trading on AI agents. And people have made millions of dollars in trading AI agents 2 years back, in the starting of 2024, I guess. So they have made money. So this can be repeated again, because now almost all AI tokens have bottomed out. If this is a kind of bottom for BTC, for local, or you can say another lower high at 99,000, AI agents can pump, and many coins have been suppressed. They are oversold, and you can make a lot of money on that. So this was the update of for BTC, Ethereum, as well as virtuals. And by using this update, our total, you can say, crypto update is done. And targets, you guys already know. For BTC, we are targeting 99,000 in January, and for Ethereum, we are targeting around 3,600 in January. But if BTC rejects from 94,000, and if somehow BTC gets below this level, which is 89,800, if BTC closes any daily candle below this level, then we are, you can say, even locally bearish, because in that case BTC would have broken the trend of uptrend, and then we would go lower. So we will be targeting then 67,000 or 65,000 area at that point. So what we really need to see here is that BTC closes daily above $91,500, and then what we really need to see is BTC close one daily candle above this level, which is at 94,000. And whenever it does that, we are going for $99,000. For Ethereum, same. What we really need to see is Ethereum closes daily candle above this level, which is at $3,180 around here. So if Ethereum closes above this, the next target would be here, which is at $3,300. And then the next target for January, which is here, it is around $3,700. All right. So this is the target for Ethereum in the month of January. So these are the main two coins on which whole crypto market is based on currently, and this is the scenario of this. So now, now we are going to talk about our lack, or you can say how to grow here. All right, no. Here the topic here, it is written how to grow small portfolios. Okay, so this is the topic for today. How to grow small portfolio. So what we are going to do here is, right, I'm going to stream here. Okay, so what we are going to do to grow small portfolios. There have been a lot of newbies in crypto market from last many years. Even I have been in crypto market from last 7 years, so to speak. Yeah, it has been 7 years. And from last 7 years, I have seen you can say even hundreds of thousands of people entering into crypto market, and then trying to make money and then get out of crypto market, because it is so much hard right now. The people come into the crypto markets by expecting that they can make quick money, and then they quit within 1 month. Even 1 month is, I've said, maybe it is more than enough time, I've said, for them. People quit in 1 or 2 days. Why? And what is the reason? So generally, I'm first talking about crypto market, and then I'm going to move on to whole market structures if you are trying to grow as a trader. So what they are not understanding before coming to the market, that is risk management. They don't know what risk management is. They don't do any research on anything in which they are putting money into. Now every single thing, or you can say every new project, is running on hype. All right, if people are talking about it, and if people are talking about it on Twitter, people are talking about it on Instagram, if people are talking about it on YouTube, and they are influencers, man, people throw their money like this into the projects. And they don't even throw like $10, $20. They threw around $10,000. Even some people throw around millions of dollars. So that is where the problem is. People come into crypto market expecting quick returns, and then they get out of crypto market by being poor. So this is the problem with the people in the mindset. And this is why crypto market is still struggling. They have been more than 10 or 20s of thousands of coins right now. Most of them were meme coin, and people have spread their money into these meme coins instead of spreading their money into real fundamental working projects, working companies. And that is why we haven't seen that altcoin which everyone was expecting from last 5 years. So aside from that, what we, oh no, sorry, I forgot to see the comments. Okay, so aside from that, what we are going to today talk about is how to grow your portfolio from small amount. So I've seen when many newbie people who come into any market, even if it is stock market on any country, they are coming in with the portfolio if less than $100. All right, many people are coming into markets with even less than $100, and they are trying to make hundreds and thousands of dollars. Now that is their target. All right, it is not a bad target, right? It is not a bad target. It is not like this is an impossible thing to do. No, it is not impossible. It is possible. You can grow $100 into hundreds of thousands of dollars. What is impossible is thinking that you can do that. You can make uh, it would be around tens of thousands. Yeah, you can make 10,000 returns, 10,000x on your money within 1 month, within 1 year. Now that is where the problem is, because many people lack the research, many people lack the emotional balance, emotional strictness they need to do trading, and many people lack risk management. They don't know how to manage their risk. So that is why it is kind of impossible if you are trying to do that within 1 month. That is the main problem that people have in growing their portfolios from small to mid size or large size. Now it is not impossible. You can grow your portfolio from less than $100 or even $100 to tens of thousands of dollars or even $100,000, even millions of dollars. But you need time and you need patience as well as discipline. If you cannot follow your discipline, if you cannot follow risk management, you cannot grow your portfolio into any kind of this, any kind of target which you are targeting. Right, so this is the reality, and I'm talking about this from my personal experience, from experience of others. I have seen, if not less, then I have seen around 500 people, 500 people which I've seen from my eyes, which started trading with less than $100, and they blew up their account within 1 month. All right, I have seen 500 people in through my eyes on the Telegram channels. I've seen that. So that is why I'm saying this from personal experience as well as the experience of others. Don't blow up your account if you don't know risk management. You have to understand your risk capacity. You have to understand that, and you have to understand the risk management. If you cannot follow risk management, if you cannot follow your discipline, and if you cannot control your emotions, you are not going to make money in while trading. Trading is one of the toughest jobs there is. Trading is a zero sum game. For you to make money, somebody else have to lose money. And you are trading with the best of the best in the world. You're trading against market makers. You are trading against institutions. You're trading against normal human psychology. You're trading against human emotions. You're trading against the trends. All right. So that is why it is very important to follow your discipline. Now, this can be a kind of cliche type of lecture, but I'm going to condense this whole thing in the live session time which we have. So, first thing which you have to understand, and this is the most basic thing, and this is the hardest thing to understand, that is, market is not going anywhere. You have to understand that. You have to put this into your skull. You have to put this into your brain. This part. You have to make this stick in this. So you have to do that. You have to understand this distinction, this reality. Market is not going anywhere. I'm not talking about any particular market. I'm talking about every single market there is. If you're not trading in illegal markets, then that market is not going anywhere. It doesn't matter if you are trading in the stock market of Brazil. It doesn't matter if you are trading in the stock market of New York. It doesn't matter if you are trading in the stock market of India. It doesn't matter if you are trading in crypto. Market is not going anywhere. So if you're trading, you have to understand this: market is not going anywhere. And the target which you are putting in your head, that I want to grow this $100 portfolio into $10,000 portfolio or $100,000 portfolio, that can be achieved. But first you have to understand market is not going anywhere. After you have put this into your skull that market is not going anywhere, then you can be patient enough, then you can be disciplined enough, then you can control your emotions, because you know you have a lot of time, and you need time. Time is your ally. From past 4 years, crypto market have been brutal. People were thinking about quick gains, and they have been 1 or 2 months every single year where market was just going berserk. And then people were like, all right, I have missed that, now I'm going to make this money out of crypto market by doing that. And then they lost their money again and again, and whole year went by. So by doing this, 4 years have passed, and people are still waiting for altcoin season, which haven't come, by the way. And I was wrong too in this. So I'm not going to say that I was smart enough and I advise people to get out of the markets. I'm not going to say this. I have been wrong. But if you followed your risk management, if you were following risk management, as well as if you were following your discipline, then I'm sure you are not wiped out. Every single day there is a channel on Telegram where it says Binance liquidations. Every single day millions of dollars are getting wiped out, either by longing in the longs or either by shorting in the shorts. So you have to understand this: trading is a zero sum game. For you to make money, somebody else have to lose money, and whenever you are losing money, somebody else is making the money. So you have to be super smart, you have to be super disciplined, as well as you have to be super patient with your money. The first job in trading is for you to protect your capital. That is the first job. As soon as your trade is in the profit, as soon as you are seeing 10% profit on your trade, either it is a spot, or either it is a options trading, or either it is a futures trading, whenever you are seeing profit on your trade, you put your stop loss at the entry so that you don't lose money on that trade. If it goes up, good. If it goes down, at least you have saved your money. And for you have to understand what kind of trader you are. You have to understand your type. Are you a positional trader? Are you a scalper? Are you an intraday trader? Are you intraday trader? Means you can hold your position for a long time. Are you a swing trader? You can hold your positions for months. Now that is where you have to understand the distinction, because it is you who have to understand that. Nobody can teach you trading. Nobody can teach you about your type. It is you and only you who can understand that. And you will understand that by taking trades. I know people have many people have suggested that you should try with the demo account, and you should try trading there for 6 months, and it will build your confidence, and then you come into the markets with the money, and then you try your trading and you will get better results. I agree with this advice, but I have also seen people who have done this, who have done trades on demo accounts, and they were doing very well. And after 6 months or even 1 year, then they came into the real markets, they started trading, and then they blew up their accounts. Why? Because when you are trading with the fake money, with the demo money, then there are no emotions. You are totally emotionless, because you are not trading with real money, and subconsciously you know that it is not a real money. I'm trading with the fake money. So even if it gets SL, it doesn't matter. But when you put your money into the market, now that is when whole game changes. Now you're saying, all right, I'm making $2. All right, I'm making $10. All right, I'm making $50. I should wait more, wait for more, wait for more. And then suddenly your whole portfolio or your whole profit is poof in the air. It gets boomed, it gets your stop loss, and sometimes your whole profit gets into the air and it turns into the loss if you haven't put your stop loss at the entry. So that is what I'm saying. You have to trade. You have to trade with your own money to understand what kind of trader you are. And it doesn't hurt if you can do demo trading. It doesn't hurt. So two things we have covered. First, market is not going anywhere. First, you have to understand this. You have to get this through your skull. All right. The second thing, what kind of trader you are. That is the second part which you have to understand. All right. So these are the two things which you have to understand before you can grow your $100 portfolio to tens of thousands of dollars. Now, self-promotion time. Right. That is my favorite time. So again, for the people who don't know about myself, my name is Shubham Sharma and I'm a business consultant. I have been a business consultant from last 10 years. I have consulted a lot of people and my consultation makes impact. I have made people money. I have helped people make money and a lot of money. I'm not I'm not exaggerating. I have helped people making a lot of money. So if you have a business, if you want to grow your business, you can contact me. All the links are given in the description. You can contact me via Telegram, via Instagram, via Facebook, via Twitter. So you can contact me there. The links are given in the description. And the charges will be revealed to you after I know about yourself. So how this whole consultation will work is you contact me and I will ask you about yourself, what kind of business you are doing, what is your financial status, what kind of advice you are seeking. Is it a business advice? Is it an investment advice? So I would give you advice according to your situation. And another thing, all the advices which I'm going to give you, I'm not a financial advisor. All right. I'm not a certified financial planner in my country or any other country because I believe in competence. I believe my results talk, my record talks. So if I give you any advice, you contact with me, if you take my consultation, then if I give you any advice, you should run that advice by your financial planners, by your financial or legal guardians or whatever, financial attorneys. So you run that advice by your financial planners and then you can act on that advice. And believe me when I say this, when you act on my advice, you will make money. So that was my self promotion. Now we are back to the topic of growing your lower, or you can say small portfolio into a bigger portfolio. Now we have covered two things. First, market is not going anywhere. Second, what kind of trader you are. Now third, which is risk management. Now first part we have covered in risk management, which is you make your trades risk free. That is the first important lesson which you have to understand. If your trade is in profit, you should put your stop loss in the profit. It doesn't matter if it gets taken within 10 seconds. It doesn't matter. First, you have to understand that protecting your capital is your first priority. All right. So in the risk management, first priority is protecting our capital. Second, what kind of trades you prefer, what kind of sets you get. Now, there are many people who trade on 1:1 trades. Means if their SL is taking $2, then their profit is also $2. Some people do 3:1 trading where their SL is $2 and their profit would be $6. And some people do 1:10 trading. Now their SL is $2 and their profit would be $20. All right. Now, what is this trading? What are these types? If you don't know about that, now these type of trading are very common in the practice, and only with practice, only with trading, you would understand what kind of trades you are getting. Now, the more R you have on the profit side, the less chance of setups being formed are in your favor, right? So what do I mean about this? So let's say You are taking a trade where where your stop loss is $2 and your profit is $2. Now it is a 1:1 trade. All right, you lose one portion and you gain that one portion. Now this is a very common occurrence in trading. You can get these trades multiple times in one single day in any crypto market, in not in crypto market, in in any market. It doesn't matter if you're doing options trading in stock market of any country. It doesn't matter if you're doing futures trading in crypto market. You can get these type of trades every single day, multiple times, 1:1 trading. And it is a kind of good trading, but it takes a lot of energy out of you, right? Now, there's a second type, which is 3:1 trading. And this is the most commonly used by traders. Now, what do I mean by 3:1? That is, if you're making $6, your loss ratio is only $2. So if your profit is $6, your loss on that trade would be only $2. That is 3:1. Your profit is 3 times the loss. All right. So this is the second type, which is the most common type of trading. Now in this ratio setups, if you are finding setups in 3:1 trading, then these setups would be less occurrence. These setups would be in less occurrence in daily time frame, right? You would find less trades in this type of setup where your profit is 3 times the size of loss in one single day than in 1:1 trading. Now, on the other hand, which is extremely profitable setup, which is 10:1, which is you're making $20 with the loss of only $2. These type of trades are called asymmetric trades, where one trade would make you so much money that you can cover around 8 to 9 trades loss worth of loss. All right. So these are called kind of asymmetric trades where your loss is very minimal, but your profit is very, very big. And these type of setups don't occur very often, not in a single day, let alone not in a week, maybe, let alone in a day. All right. So these type of setups are kind of stroke of luck also. So when you are trading with this type of setup where you are making 10x of your profit, where you are making 10x profit of your loss, now these setups are very, very rare. And if you're that type of trader, you have to be very, very patient because your trade size is very, very good. Your loss is very limited and you can put your money, more money into these kind of setups. And if you make the money, you are maybe probably done for your whole year, right? So these are the kind of trades setups which you should find, which you should focus on. And only by trading you would know what kind of trader you are, what kind of setups you get, in which kind of setups you thrive. Are you thriving on 1:1 setups? Are you thriving on 2:1 setups? Are you thriving on 3:1 setups? Are you thriving on 5:1 setups? Or are you thriving on 10:1 setups? And sometimes, not even sometimes, in crypto it is especially true. People go into meme markets by having a ratio of hundreds and even thousands of ratio with one. They are putting $10 or $100 in the greed of making hundreds of thousands of dollars from that 10 or $100, and they are putting their money in the memes, on the meme market, on the meme coins, on the newly launched meme coins, and they are then praying to the god, all right, let's make 100x, let's make 1000x. So this is what gambling is. All right, so you have to understand that you are a trader, you're not a gambler, and only by trading you would know how much setups you are getting. So now this thing is done. You know about your putting your profit, or you can say putting your stop loss at entry when your trade is in profit. Now second thing is you have to know what kind of trader you are. Are you a swing trader? Are you a positional trader? Are you an intraday trader? Are you intraday trader? You have to understand about your trading type. And then third thing, which is also done, is what kind of setups do you find originally, right? What kind of setups you thrive on? How much is your loss on almost each setup by average, and how much profit are you intending to make on those setups? Now this is the crucial part, right? This is the risk management part. This is the part where your money comes into play. Now fourth part, which is very, very important, it is about controlling your emotions. Now, nobody, it doesn't matter how many times you have heard these advices, it doesn't matter how many times you have attended your courses, it doesn't matter how many people you have met for these particular reasons. But this fourth part, that is why it is on the fourth number, which is controlling your emotions. In trading, controlling your emotions is 90% of your battles. Yeah, 90%. Because when you are not putting your money in, you are kind of a robot, right? You make money and you lose money because you know you are not getting that money, so there is no emotion. And when there is no emotion, you trade very effectively, you trade very efficiently. But when the time comes to put your money into the market, then the whole roller coaster ride starts. Your mood swings like this, all right? You kind of make waves in the moods. When you are getting profit, you are in high, and then suddenly your profitable trade is in shook loss, and your mood is also down. Then again in profit, then your mood starts going up and then down and down. So we make a sine wave, all right? So we make this kind of sine wave. So that is why I've said the fourth part is controlling your emotions, and I've I have put this part in fourth number, but it is kind of first number. But because I have to make you understand that you have to protect your capital, you have to manage your risk, you have to deal with the money first. That is why I have put this in the fourth number, because emotions comes when you put money is in danger, when you are playing with your own money. Only then emotions come. Let's say let's say your friend gives you $2,000 and he says, you trade with this, you trade with this money, and I don't care. Now the now your trading style would be totally different, right? Because it is your friend's money. Your trading style would be totally different. Maybe you would take more risk because it is not your money. Maybe you would take less risk because it is someone else's money and you feel the pressure. So the trading which you are going to do with your friend's money is totally different than the trading which you're going to do when your money is on the line. So emotions comes only when your money is on the line, and that is why it is very important to control your emotions. Now, how to control your emotions? Now, many people have talked about this in their books, in their courses, that first you plan a trade and then you trade the plan, right? First you try to make a setup whenever the price is breaking up, whenever the price is breaking down. This is my TP, this is my SL, this is the reason for trade. And then you put in the trade, you put in the SL and TP, and then you sit back. But 99% traders fail here, because whenever they see that trade is going to their stop loss, they panic, they close the trade in the loss, and then they see their stop loss wasn't hit, and then trade is again in profit. Then the trade is going into their targets. And on the other hand, when market is going up, the trade is hitting the TP, and maybe their mental TP, their mental take profit has hit and trade is above it. Then they get into greed. All right, this is going up, I'm going to make more money. They don't put SL. They don't put SL on the entry. They don't put SL at their TP, which was their original TP. And then suddenly they lose their money because one bad move, one single candle wipes out their gains. And that is why I said it is your job to control your emotions. And that is why I said your emotions only come when the money is yours. So this is the whole point. This is the whole reason why I've said this, why I have talked about emotions in the fourth part. And that is why I've talked about money, about taking risks, about taking your setups first. And this is why we are talking about emotions on the fourth part. You have to understand what kind of person you are. 70% people are greedy by nature. When they see green, they are becoming greedy. They say, all right, it is going up, let's go up. And they take the market trade. They don't plan their trades and they lose money. 30% of people are very fearful. When market goes up, they don't take a trade, they do a short. They try to go against the trend and then they lose money, right? So you have to understand what kind of person you are. And my advice again is going to be, first plan your trade and then trade your plan. It is the most common and most ancient advice on the trading, and you have to follow this advice. But let's say you don't plan your trade, you trade on the go. Because I've seen many people by which do trade by going on the go, like all right, I'm seeing the charts, okay, a trade can be done here, long, short, they do that and they often make money. But these kind of traders, this kind of trading is not sustainable. You cannot grow your portfolio by being an emotional trader, by being an impulsive trader. You have to be proactive. Proactive means, first you understand the chart, you draw your resistance and supports, and then you wait for your entry to hit. If it is a short, if it is a long, if it is a spot, it is you who have to decide that. But you have to be proactive. Now, after consolidating all these things, how to grow your portfolio into tens of thousands of dollars? When you understand all of these things, when you get to know about all these things and you execute these things into your trading, then by using patience, right? I'm using the word patience. Many people have used word patience, but what does patience means? Now, many people say patience means wait. We wait. No, it is not just waiting. It is waiting deliberately, waiting believingly. Patience means waiting believingly. What does that mean? I believe I'm going to make money. I believe my setup is going to go good. I believe my trade is going into the profit. I believe my trade will go into the profit. Or if you are in a losing streak, if you are losing money every single day and again you are showing up for a trade, again you are showing up for trading, then I believe I am a good trader and my trading would get hit, my trading would get profit, right? So you have to be patient here. You cannot grow your portfolio in 1 month from $100 to $10,000. You cannot grow that and you shouldn't aim at that. I mean, many people are here in the world who are doing these kind of challenges in crypto market, especially. They do meme coin trading by putting $2, by putting $5, by putting $10, and try to make $10,000 within or by the end of the month. I have seen no one in the crypto market. With my eyes, I have seen no one to do that in 1 month. There have been many people on Twitter. It seems like there are thousands of people who have done this, but in front of my eyes, I have not seen any single one. And this shouldn't be your aim. And another thing which you have to understand, you should not trade by borrowing money, all right? You should trade with the money you can afford to lose. If you are trading by borrowing money from someone else, then you are going to do irrational trading, then you are going to do emotional trading, and you can go into the path of revenge trading. So that is the whole consolidation of our today's life. So this is it. I have talked about almost everything which I could. This is not a trading teaching course. This was a live class where I could talk about the mental or physical, or you can say practical obstacles of growing a wallet from small size to large size. And if your target is $10,000, that you want to grow your $100 portfolio to $10,000, or if you want to grow your portfolio from $100 to $100,000, then your target should be, I am going to grow this portfolio in next 10 years. Yeah. Somehow human mind is very overestimating in short term and underestimating in long term. Like if a new person, or if a person is who is new to the business, he starts a business, he will aim like, he will be aiming like, I'm going to make $1 million in 1 year, I'm going to make $100 million in 1 year. People start like this, and in 10 years they don't think about it. And if you ask someone, all right, I'm going to give you money, you have to start this business, but I'm going to ask you how or where you are starting or seeing this business in 10 years if I give you money. And then that person is going to say, in 10 years, I would say that business can go $100 million in 10 years. Now, it is still a quite huge achievement, but if that person is good at his job, if that person starts a business, maybe he can grow it into $1 billion company in 10 years. So that is what I've said. In short term, we are very overestimating, but in long term, we are very underestimating. So if your goal is to grow your $100 portfolio to $10,000 portfolio in 10 years, it can be done even in 1 year. It can be done even in 6 months. That is on luck. That is on your discipline. That is on your trading setups. That is on your emotional control. But if you put a longer target, if you put a longer timestamp on your target, then that would benefit you on the long run, because you are going to be less emotional. You are going to be less emotionally driven. You are going to do less revenge trading, and you are going to do less mistakes, because the time which you have given to yourself for growing your portfolio is 10 years. 1 year, even 1 year is very long time. 10 years is a very long time. In 10 years, a child grows up from 4 years to 14 years. A child grows into an adolescent. A young adult grows into a full adult. In 10 years, a child can become a father of a child. So 10 years is a long time, and that is why giving you a longer time ramp, giving you yourself a longer time frame to grow your portfolio helps you in making that dream a reality. So this is it for today's live, and this is it for today's live. And let's see if someone is here on the live. Okay, there were 6 views somehow. I don't know how many people have listened to it. Okay, so I'm asking for your questions. I'm here for answering your questions. If you have any question regarding trading, regarding growing your portfolio, you can ask me. I'm here. I will answer your questions, and then we will wrap this live up. All right? I'm here to answer your questions. If you have any question, you can ask me right now. Is there anyone? Last 2 minutes, and then we are going to wrap this live up. Again, if any one of you have any question regarding growing your portfolio from small size to large size, or if you have any question about my consultation, you can ask me about that. Hello, is here anyone? Anyone here? Let's go. Okay, so we are wrapping this live up. Again, last 20 seconds. If anyone have any question regarding anything, you can ask me, and then we are wrapping this live up. Right. This is it for today or tonight, wherever you are. This is it. I hope this live have helped you in growing into a better trader. And I have really talked about very deep topics in trading, and I have seen no one talked about these topics in any trading in any course which I have personally, you can say, attended or personally taken, right? So this is it. I hope these advices are going to help you in growing to be a better trader, a very good trader. And I hope and I guess and may God bless you with a lot of money, a lot of opportunity, and a lot of prosperity. Thank you for watching. Peace out.